Hey everyone, it's Evan here from the Trade Risk on Friday, April 20th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So stocks finished green across the board this week, but well off of their highs. We had north of a 2% rally or so or more across the major averages this week, but we did see a retracement Thursday and Friday of this week, giving back much of the gains that we saw early in the week. Still finished green. The retracement was fairly orderly, but left for some uninspiring, say, weekly candles that we're going to talk about in this week's video. We had the 10-year yield breaking to new all-time, not quite all-time highs, multi-year highs though. The 10-year yield on the run continuing higher, so something to keep an eye on. If that continues to see such strong momentum, that is going to put some pressure on equity markets. And we have earnings season, which is well underway now. We have a number of companies that reported this week. We have more to come. So if you're a trader, pay attention to your holdings and those dates. Don't accidentally hold into an event when you do not want to. So lots to talk about in this week's market recap video. I hope you stick around. All right, let's jump in here with the S&P 500. We're looking at the cash market and we're looking at a weekly time frame. So each bar on this chart represents exactly 1 week worth of trading. So when we look at this week's performance, you can see we're up almost 14 handles here, up 50 basis points, 0.5% in the S&P 500. But here's what's important. Let's look at this week's range. Let's look at this week's candle. This arrow is pointing to it. Take a look at the size of the tail on the top end of this candle. 85% of this range here has been faded out, and we closed exactly where we opened on the week. So we started the week off with a gap higher, about a 0.5% gap higher. We proceeded to push higher throughout the first half of this week, and then we kind of rolled over into the end of the week, closing exactly where we opened. So if you're a bear in this market, if you're a seller, if you're trying to if you want prices to head lower, you're going to want to see follow through or confirmation next week with more rollover action, with prices continuing to break down here, which would confirm this reversal action that we saw here this week. On the other side, if you're a bull, if you want to see this market kind of continue up and hold on to its strength, you are going to want to see this market hold in right about where it is, because it's at that critical, if this number sounds familiar, 2670. We've talked about that on and on again over the past week or so, as markets were bumping up against this exact level for the past 3 weeks, making highs all around 2670, 2675. That is where we closed here on the week in the S&P 500. So this is the level where we're going to want to see it hold heading into the sort of end of April to finish out the month. So a positive start, a nice push higher. We had our midweek video, talked about the constructive bullish momentum burst to the upside. And now that we've given that, or almost all of that back, now we really want to see if the market can prove itself here. Can the buyers step in here, and do the sellers sort of dry up here back at this 2670 level, or are we in fact going to roll over to the downside? That's what we want to pay attention to heading into next week. This is a fairly ominous looking candle here, printing right at this 2670 level. You have the flat 8 and 20 period moving averages right here. You get the 50-day SMA, which is not on this chart, but it's hanging out in this vicinity. You got these cluster of highs. So there is a lot of charge, energy, and technical indicators and confluence right in this general area. So let's go to the daily chart now of the SPY. So we'll switch over to the SPY. We'll look at a daily chart as well. And what you can see is, let's get some of these lines back here. So to kick off the week, again, we had this gap up on Monday. So no follow through to last Friday's kind of sell off into the end of the week. We talked about this in our midweek video. We had this pop higher to start off Monday, Nice follow through day on Tuesday. This was the encouraging action here. We had this nice bull follow through. We saw the market confirming kind of Monday's push higher here. We talked about the bullish implications there. We wanted to see this market really hold above 266 or so was going to be our line in the sand, as we sort of stated in Tuesday's video. And look where we closed, 266.61. So we are here. We are back at this kind of support level. This is where we want to see the bulls step in. And if we look here at this trend line, we did break it. Right, so we did break the ascent, the slope at which we were rising since April, since the beginning of April. As we've been grinding higher here, we've been kind of moving at this trend line pace, and you can go down to an intraday time frame and refine this a little bit closer. But you can see we clearly have broken that trend line. So if aggressive traders or aggressive, short sellers here or letting off the gas a little bit, however you want to approach it, seems, appropriate or makes some sense. And then the fact that we did get some more kind of confirmation or follow through below that on Friday gives you a little more confidence that yes, something is in fact changing here. Now we need to see, how does the market deal with this 266 level? We had OPEX on Friday. There's lots of, there could be lots of different things. The volume did pick up here late in the day. But for the most part, this was a very light week of trading. Picked up a little bit here on Friday to close out the week. So that's the level that I think is going to be very important. If we start to break down below 266, 265 or so, then we're clearly back into this range. This breakout here could have been a nice just, suck in, squeeze out the shorts like I had a short on last week on Friday as well that I got squeezed out of right away here on Monday. So squeeze out some of those aggressive shorts, suck in some longs, and then perhaps roll right back over if we do hold below this 266 or so. There are still plenty of positives in the market, right? The breadth has been pretty strong. We look at NYSE cumulative AD line, for example, that did briefly break out to new highs. It has retraced since then, but there, that in itself is pretty bullish. We talked about Tuesday the VIX on how it was getting hammered there 5 days in a row, so we got that little flare up now. This could be a reasonable pullback if the bulls can hold in right in here. If we do continue to see range expansion and volume come in to the downside next week, that is exactly what you do not want to see, is a thrust below this horizontal level on volume or on increased range. Those are bearish characteristics that you would not want to see the market take if you're a bull in this market. So that, I think, sums up certainly the near-term technical levels. 266 on the downside, which we're right there, 270, 271 on the upside. And then, as soon as you fall back down here and you lose these moving averages, you lose the 50-day SMA, you lose the last 3 weeks highs, you're back into this range and really risk opens up all the way down. There might be a gap or two to fill in here around 261. But technically, if this starts to really roll over here, we're going to be back in a fairly vulnerable spot. So Monday, it's going to be pretty important to watch how the market opens up here, how it reacts to the 266 level, and see if it can hold this this higher sort of low here or put in some support at this critical short-term level. So that, I think, really wraps up the S&P 500. Let's take a look at some of the other major markets now. We'll go to IWM next. And you can see here for IWM, much more constructive placement here in terms of larger structure. So this is the weekly chart of the Russell 2000. You can see we did finish up double the S&P, so 1.04% to the upside, almost, or actually we did kind of close above last week's highs, so that is constructive as well. Still a very sizable tail here, but well above the 8 and 20 period exponential moving average there on the weekly chart. And take a look at the daily here. We are still at a rising 8 period exponential moving average. We're still above that. So the Russell 2000 is clearly still the area of the market that the bulls want to hang their hat on to show that this market is in fact healthy. The Russell 2000 is still getting the job done. We talked about the highs back here up at 160 really open up to the upside. We'll see if we can put in a higher low here. If we can start to take out, let's say Friday's highs or so, then, we'll be in some good shape to continue that move back to the upside. But for now, Russell 2000 holding above the 8, holding above this prior level here, right around 155 or so. Best in class, still acting strong. But, you know, if you were to be very acute here in how you're drawing your trend lines, especially if you go down to an intraday time frame, you can see here on Friday, we are breaking this slope from which we were rising higher here from the end of March, early April. So certainly, again, something to take notice of. If you're aggressive, maybe that's a signal for you. If you're long, maybe you're taking some risk off the table or tightening stops, or, you know, whatever the case is. But slope has sort of broke down just a bit there in the Russell. And finally, it's the Qs. And the Qs, especially here on Friday, did start to see a little more acceleration lower, closed below the 20-period EMA here, the 8 and 20 period on the daily chart, broke the, again, this trend line here that has been controlling the ascent of this past 2 weeks rally or so, and we did see a slight uptick in volume there on Friday. So the Qs weekly structure here, again, quite the sizable tail on the top end here. 58 bips is still closed up a little over 0.5%, but this index was up, I think the most on a relative basis this week was, I think, almost 3.5% to the upside. So at one point at these highs, and it did give that back. So you can see here, still above a 20-period and 8-period EMA on the weekly chart. So again, just some mixed signals. You're really going to want to know where you live as a trader, what's your time frame, risk tolerance, all that good stuff, because that's going to depend when we start to get these mixed signal markets like we currently have. So that is the landscape overall for the major markets. I think the levels are pretty clear. I think we have some mixed signals to work with. I think bulls probably still have that overall edge right now, just a bit in their favor. But if this starts to accelerate and we start to get more selling that drips into next week, then that technical damage is going to start to open back up to the downside. So that's the major markets. Let's get into some other major markets here. TLT, and in fact, well, yeah, let's start with TLT. You can see a horrible week, a thrust away from a pretty significant level, 2% to the downside, so nice expansion in range. Volume was light today on this move, though, right? We didn't see even the 20-day average get hit on the weekly, a weekly 20-period moving average of volume here. We saw some heavy selling back in February when TLT was really rolling over. Didn't quite get that this week, but we certainly got the technical damage in terms of price. We had the gap down on Thursday, again, this ETF that tracks it anyway, and then we just saw more follow through, took out the lows from Thursday and closed the week right at the dead lows. We broke this trend line, we lost this 120 level, so just quite a bit of short-term technical damage there in the long TLT bond. If we look at, which I mentioned, let's see if I remember it, I think it's TNNX. Yes. So if we look at the 10-year yield, so this is the yield now, 10-year yield, you can see breaking out to new highs here on Friday, so 1.27% up on Friday. But here's the weekly time frame. It's up 4% this week. This is Treasury yields, just the index that tracks Treasury yields. And when we look at, say, a monthly chart, you can see the multi-year breakout that's underway here, and just quite a bit of momentum in yields rising. So that is going to be something we need to keep an eye on as traders, as whether or not, if this momentum continues to keep up here on as far as yields go, of what kind of impact that has in equity markets as a whole, as an asset class. So that's the 10-year yield. I thought that would be interesting there. What else? What were we on? I think USO is probably next. We'll at least go there next. So this is oil, and you can see oil here on the week did finish positive 1.5%. Continuing the breakout bar from last week. We're stretched higher here on the weekly time frame, but we have this nice strong uptrend still intact. When we go down to the daily chart, we did put in a bit of a outside reversal candle yesterday on Thursday, but and we did get a little follow through initially this morning, but you can see we're starting to already get some buyers step in here right at this above this rising 8-period exponential moving average. So USO for now still looks strong. I know there are lots of other reasons why this should not be going higher, but when we're looking at technicals, this market still looks pretty strong. On the downside, if we start to abruptly or quickly lose 1350 and then more importantly, this 1330 level, which represented essentially the kind of double top here, or the consecutive highs here from late January, mid-March, that would be your signs of a reversal or maybe some more weakness or some changing of the guards there. But for now, USO remains strong. Natural gas still is struggling a bit here. It did finish flat on the week. It did have some movement all around. It had some early gains this week, but really couldn't get any strong closes. We popped up to this 22.75, almost 23 level, and you can see we just really faded around. Starting to see volume come in though. Take a look here at the bottom of this chart. So that tells us that some interest is finally starting to brew up here in natural gas. I've been mentioning that we've been thinking about, expansion coming in this market fairly soon. I think this could be the start of it, so something to pay attention to. I think over 23 is still the upside level now we want to see taken out, and then all bets are off below 2180. This, then we're very vulnerable here in natural gas, but it looks like it's trying to hold on and perk itself up. So let's see if that is a in-play sort of instrument into next week or the next several weeks, really. So those were oil and natural gas. Let's look at gold next. Gold had a good start to the week as well, but really faded and gave it up into the close of this week. You could see we popped our head above this 128 level. This has been resistance up here, and you can see once again still holding as resistance. We closed at the lows of this week. We're still above a rising 8 and 20 period exponential weekly moving average here in gold. Still think this can turn into a big continuation pattern, but it is yet to be seen if that is true or if that is going to manifest itself. Right now, the sell-off here on Friday, not ideal. Definitely puts the pause on any bullish excitement here, on a bullish resolve. High volume, kind of reversal week. So we're gonna have to wait to see if this can stabilize and find the higher low to lift itself back up. Silver, on the other hand, very impressive week. High volume breakout week for silver here. Take a look, 57 million shares trading of the SLV ETF. You have to go all the way back to 2016 since we've seen that type of volume. That is encouraging here, taking out and clearing above the past 10-week highs or so, or really even 11-week highs. So a nice move for silver structurally. Still kind of in this, looks like it could potentially be this bottoming pattern, or this at least a sideways enough pattern that it wants to try and lift out of. It has more work to do. It was a good start this week. Didn't finish quite at the highs of the week, but still did a lot of work clearing above this 1590 level. I think this is going to be interesting and in play potentially next week, especially if we can start clearing above 1630 or so. I like the volume that's coming in there in silver, so we'll have to see how that pans out into next week, but something I'm eyeing for potential trade. That's it. I think we covered everything for major markets, at least that I wanted to go through. Let's take a look at some sectors now. So we'll look at the sectors here. Same chart, same view. Sort them by their weekly return here, and we're going to start right from the top. So the XLE, so this is the top performing sector this week, and you can see it was up 2.6% on the week. You can see it pulled back a bit here on Friday. Very stretched, kind of gone parabolic here in the past 5 or 6 days. But this XLE was the first to lead on the downside, right? So when the market, really before the market started to take its big spillover in January and February, or late January, early February, XLE was really the first to break to the downside and really, get crushed the most on a relative basis on that first decline, and then it just went quiet. It just moved sideways, consolidated, and now as the market over the past 2 weeks started to accelerate to the upside, XLE also took the lead here, and it started to lead this market higher to the upside as well. So it was first to break down, first to lead us back. It is still in this bull trend here. It's got quite the steep ascent here of recent, advancement, and it's staying pretty resilient right now. It's tough to chase this. There's a lot of stocks though that are breaking out or have recently broken out, but lots of them are quite stretched at this point. So some rest here is probably very reasonable, but I don't see too many signs of wanting to aggressively short this. This is a leadership group at this point, so I think we should respect that. If we do start to see a bigger breakdown here, then that might spell bigger disaster for the market if this leading sector starts to roll over, if something else doesn't take its place. So that's XLE. XLI, second in command here this week, 2% to the upside. Again, staying pretty resilient. Think about where some of those other major averages closed at. This is still well above the 8-period rising EMA. It did finish lower here on Friday. Structurally, longer term here, still kind of a mess. It needs to clear. You could draw, say, couple of different trend lines, or look at these series of lower highs that are coming in here from from the all-time highs in January. So something to pay attention to. Some resistance coming in here as we expect. Does this roll over? Does this turn into a lower high that rolls this market over like it has in these previous pivots? That's something to pay attention to as well. So for me, not too exciting, but it was a good performing sector this week. And then we had consumer discretionary, which was number 3, rounding out a 1.74% rally this week. You can see taking out and closing above last week's highs. Still, about a 60 or so percent retracement off of the intra-week highs, but holding above the 8 and 20 period. Again, doesn't excite me too much here. We're kind of just in the middle of nowhere for XLY. You got kind of the, again, you could draw the same type of trend line or move or extrapolation from these prior highs here. It's kind of just sitting, mixed in here. Nothing too exciting for me there. If we go to the worst performing of this week, it's Staples. Staples got crushed this week. 3.99% to the downside. We took out the prior lows here from 2018 back on March the 23rd, so towards the end of March, and you can see we're making new lows for 2018 in the staples. So volume not so high. When you look at these past down weeks, they have come on higher volume, but still some real ugly price action. Maybe it's some type of capitulation that we're finally seeing, but it doesn't look like a sector to be bottom feeding at this point. But if you're very short and nimble, there's probably opportunity there. Whenever markets are selling off big, there's generally increased volatility. Shorter term traders can take advantage of that. So IBB, second worst performing this week, minus 1% to the downside. If we clear out that there, we can see here on the daily chart now we have breaking sort of below, looking really vulnerable here, as this is kind of what the picture we were talking about for the S&P 500 is it if it started to lose these cluster of highs, which IBB barely got above, and it's already starting to potentially roll back over here, this is going to be in trouble. So 100, that's the key support that has held 5 or 6 times on tests. Let's see if we get back down there, see if seventh time is a charm. For now, we're below a 20 period and 8 period declining, bearishly aligned moving average. That's not encouraging to see, so bulls clearly have the work cut out for them here in IBB. And then finally, third worst performing is technology. And technology here down just slightly on the week. If we look at the weekly picture here, you can see full-on reversal from this week's intra-week sort of progress. We're still above an 8-period EMA here, but when we look back at that daily chart, we're starting to lose the 20-period. It's really semiconductors. Semiconductors were what got crushed here. They're not in the sector list that we just looked at, but you can see here just a ton of volume coming in here. And on the week we saw SMH, if you want to use that as your ETF proxy, minus 4.73%. so semis got crushed, took out last week's lows, took out the prior 2 weeks lows, and in fact almost took out, so just the past 2 weeks lows. We're still above the early February sell-off here, down around $97, $98, but we're right back there. So 8 and 20 period on the weekly chart starting to more steeply sort of roll over a bit here, or potentially get that bearish crossover. High volume sell week. Semiconductors have been a leadership group for this bull market for such a long time. It's going to be tough if these are out of the game here, but technical damage was certainly suffered this week, so that is something to be aware of. So I think that's it. I think that's everything I had for this week's video. Let me take a look. Yeah, that's it, based on my notes there on the side. Earnings season, don't forget about them. We get that coming out over the next 2 weeks or so. Markets, mixed signals, navigate it well. And remember, you don't have to trade every day. You don't have to be all in, manage risk, take half position sizes, do what you need to do to get through a choppy market environment if it's not ideal for you. So thanks so much for watching. Every Tuesday and Friday, subscribe to our YouTube channel if you like these videos and want to stay updated every time we publish them. Thanks so much. Have a good weekend.